cheapest REIT in Singapore. Not meant to be clickbait, but if I really wanted to be clickbait, I should have put this REIT is going to 10x. But today I'll be justifying why this REIT is indeed cheap in my eyes. I value it as a great opportunity. This REIT currently is priced at $1.61 as of this time of filming. Price to book value wise, it's 0.76 times. But if you use the latest quarterly net asset value NAV, it is $2.132 per unit. Which means the price to book value is actually 0.755 times. Now, why cheap? That's a bigger or more important question, because cheap, there is always a lure that it could be a value trap. But I'd like to justify this time when I mention cheap, it's probably I'm mentioning along the lines of undervalued. In any case, it's still not the cheapest in terms of price to book value. That honor falls to Lippo Mall Indo REIT, which is trading at close to half of its net asset value. Now today you're going to hear what are the opportunities I see with this REIT because I visited the grounds recently and I'd like to share with you some newest data from its latest quarterly results. So if you're keen, continue watching on. Hi guys, welcome back. If you have been following this channel, you could probably already guess this REIT is Suntec REIT. The good part about following up with some of the names that you have heard before is you can track and having a lot more continuity rather than jumping from idea to idea. Suntec REIT is something I'm very familiar with. I go there at least once every month. But before I explain a bit more on this REIT, let me share with you a sad story. This used to be a space for one of my favorite F&B outlets, Just Dough. So Just Dough, I don't know if you're hearing this or not. So sad to see you moving out from Suntec Mall. I go there usually to tapao your bread. Fantastic. Keep up that good product. I'll look for you in other places. So back to Suntec REIT. The tailwinds are very apparent in my eyes. I see the convention reopening up. I've mentioned before in a previous video that conventions could start to run. Events could start to run. We could see baby fair, bridal fair, car fair, all coming back, as well as bigger MICE events. Expect these moving forward in 2023 regardless of whether a recession really comes or not. And when the conventions start to run, the malls naturally start to do well because people who go up there will naturally come down to buy a drink or buy some food to eat. Now, if I mention positively about Suntec REIT at $1.80 plus cents, I think $1.60 to me, with good performance now even, I don't need to say any further on what I've specifically done already. But let me pull up the proud sponsor for today, Weeboo. If you are new to opening an account with them, there are free stocks that you can qualify for. If you're keen, screenshot this, scan the QR code, or look for links below to do a sign up today. If we were to look in some latest numbers to help you understand why the share price has came down, this over here captures a large part of the potential problem that market is expecting. You see over here that Suntec REIT has a lot of debt, correct? At $4.89 billion. That places its debt to equity ratio or leverage ratio at about 43.1%. This ratio is among the highest. You see most that have a discount to NAV are usually those with a higher leverage ratio. In any case, for REITs, the cap is 50%. A consequence to this is moving forward in terms of acquisitions, it will be a bit difficult because they might need to raise equity, which means to sell rights, or alternatively, they buy smaller properties so that they don't breach this 50% leverage ratio. But a concerning part is the all-in financing costs. I've pieced out this picture for you to see that the financing cost has jumped by 20 basis points from the previous quarter itself. Now, Suntec, just like any other REIT, has some percentage of its debt fixed up already, and the amount fixed is about 50+% only. Now, the consequence of this, which is something mentioned by management, is that for every 50 basis points of interest rate increment, the dividends per unit is expected to be impacted by 4.7%. Now, to put this into number terms, currently Suntec REIT's yield is 5.9% at $1.61. If the financing cost jumps up to say 4% in total, which is pretty extreme because there's still some amount that's fixed, right? The yield will be impacted by about 15% thereabouts, which means Suntec REIT's net dividend yield could fall to about 5%. Now, coming to here, hopefully you understand why there is a sell down already, and hopefully you also understand why there might be a cap to next year's upside potential maybe. And if you are concerned, then simply go with CICT, Capital Integrated Commercial Trust, whereby they also benefit from the tailwinds in retail as well as in office. And for them, they've actually fixed 81% of their debt, so you can sleep a bit better if you see Fed raising interest rates. But that's not the direction I'm going, because in my eyes, CICT is now at a full net asset value already. I'd much rather take my chances with Suntec REIT. In any case, interest cost is always fluid. Management can always reshuffle the portfolio of loans. They could fix more loans moving forward, is very possible, especially if they believe that interest rates are going to skyrocket. The second is that management can pay down some debt if the interest rate really skyrocket. They can issue equity. But please don't. This is for the management. Because if you issue new equity now at a price to book value of only 0.755 times, I wouldn't be too keen as a shareholder. The third is that management can sell down some of its assets to raise capital to reduce this debt. Now, Suntec REIT has actually bought quite a lot of properties. Let me walk you through a bit of their history. In any case, towards the end of this video, I'll leave a tutorial I've done before on them for you to further on your learning process. Suntec REIT has actually in 2013 invested into Australian commercial property already. They have continuously bought properties in 2017 with 477 Collins Street located in Melbourne. They've also bought more into Southgate Complex in Melbourne. And in 2019, they've invested further into 21 Harris Street in Sydney. This was followed up by more acquisitions in Adelaide, which is 55 Curry Street. More recently, in 2020, they've made more acquisitions again in Sydney. But in this year specifically, they've made a further pivot to make commercial acquisitions in London. This is a 50% interest in Nova Property. So this is actually a big addition to the portfolio itself. Do know also 2020 is the COVID crash, and interest rates at that moment of time dropped tremendously. So I actually kept an eye on Suntec because it was one of them who was making moves. Then in 2021, they've continued to make acquisitions in London with the Minister Building. And along the way, they've been divesting Singapore assets, 9 Penang Road, which is opposite Plaza Singapura, as well as Suntec City Office. Now you may be thinking why they are divesting Singapore assets. I've actually shared before on a previous video, but in that case, I'll retouch on things because there's new numbers coming up. This recent divestment is another sale of its strata offices. Now this is not the $38 million one that was sold to a Singapore PR from China. That story hit Mothership and many news articles. But that is also good news for Suntec REIT because that means that the other offices could be revalued higher in the coming quarters ahead. In any case, this sale was done at a price that was 8.9% higher than the NAV. So it could also mean that the overall Suntec office value could still be revised a bit higher moving forward. But the main thing is the Singapore offices are richly valued now. The cap rate is about 3.45 to 3.55%. And the simple reason of why the value is rich is because occupancy is very strong. That is something that's very important. I'll come back and touch on it in a while. Before I get there, help me smash the like button because it's still continuing hours to prepare this presentation for you. And if you do like content regarding REITs in Singapore and small cap stocks, do smash on the subscribe button and get notified when they are released. Now the number one tailwind for Suntec REIT is quite obviously its convention center. That's what makes Suntec special in my eyes. Now Suntec's convention was previously loss-making for 10 quarters. So it's been a painful journey because when we had COVID-19 lockdowns, all these events where there are big social gatherings, all this were not allowed. So fast forward 10 quarters of pain later, you realize the Suntec convention now is registering a net property income of $2.9 million. Now $2.9 million in a quarter is really peanuts for an entity of this size. But the main part is previously it was loss-making, now is profit-making. So on a quarter swing-wise, that is like $8 million already. So that is getting more meaningful. Previously, I even went there to play badminton with a fellow finance YouTuber, Gerald Ong. So you can actually check out the YouTube shorts where I documented some of our game highlights. And not just that, right now, a lot of office people are returning back to offices to work. From what I've surveyed, everybody's working at least 3 days in the office already. And when I go down to Suntec Towers, I do see, the crowds coming back. If we were to look in terms of the sales for Suntec Mall itself, you realize that the tenant sales is even better than in 2019 already. The footfall rate is climbing close to 100%, but people are obviously spending more already there. Maybe because all these F&B outlets are no longer giving us good discounts for, food already. And I do remember that during the circuit breaker days, they were all throwing discounts. So not everything on the final bill looks very big. The main part about Suntec Mall is that it was projected to turn profitable in second half of this year. Management has guided a mildly positive financial 2022 for the retail's revisions, but they've actually done positive one already from second quarter 2022. So ahead of schedule, fantastic performance. And the main part is occupancy is now at 96.1%. In this year itself, there's going to be quite a bit of turnover. When I went out just now, I did see quite a few other stores also closed down. So I do believe they will be replaced with new tenants. And if I interpret the report correctly, things look pretty good, especially for the Suntec Retail Mall. So let's move on to the third tailwind that Suntec REIT is experiencing. And this is the core part of it. This is actually regarding the office assets. For office assets wise, Suntec REIT's management has guided a full year revision of a mild single digit gain. They've also mentioned limited vacancies in its offices. And if we were to look for specific numbers, you'll see that occupancy rate now is higher than ever before at 99.4%. This is even higher than national grade A office average, which stands at 93.6%. So when you have a strong occupancy, it's easy to raise your rental rate. And that's why Suntec offices have charged more and more in terms of per square foot rental. This is again higher than national grade A offices. So looking at these numbers, I can safely say that moving forward, it is not true that offices will become obsolete. That is as good as a myth already in my eyes. Offices will readapt to the new world ahead, and it is quite evident that the supply for Singapore offices look to be pretty tight. If not, rental revisions can't go upwards continuously. What I expect from Suntec REIT moving forward are quite a few things, and this section is all my own personal opinion. I do think it's likely that they'll continuously sell away Singapore offices and move overseas. I think that trend is built in, and that's where they're looking to possibly grow the DPU. The second part, which is possible kicker, is that ARA is in the background. I do hope one day that maybe there could be some privatization offer. I don't know about it. And if indeed a general offer comes through, that may certainly pull up Suntec's price and not let it see such a big discount on its NAV. So with that, I'll sign off from this whole tutorial. As always, leave your questions below, leave your thoughts below. With that, I'll sign off from this tutorial and see you again. Take care and goodbye.